Hey everybody, welcome to Trading Caps Exclusive Analysis. In today's video, we're going to be discussing some potential stocks, some of them that I own, full disclosure, and some of the potential opportunities for investors and traders moving forward. So these stocks will be bought on the long side, and it's the consumer staples sector. XLP is the actual sector, and you can see it's been one of the most hated sectors in this recent sell-off in the market. And why is that? Well, typically when you have inflation, when you have potential recessionary fears in Europe, Germany, the consumer starts to cut back on some of the necessary staples. And when you factor in, some of these staple stocks have been directly hit and correlated to when the release of the Ozempic diabetes drug hit the market. The magic weight loss pill that is miraculously causing people to eat less, lose weight, that's not sustainable. So I think that the staples environment, the XLP consumer staples sector, is a little bit of an overreaction to the downside when you look at the levels that we're trading at. So, for instance, looking at XLP, note this sell off down from $76 and change all the way down to a low of 65. Basically, you had 10 weeks of consecutive selling. And if you look at the range that it fell, that's a percentage range of about 14% in, say, 10 weeks. Look at the COVID crash when we basically shut the whole world economy down. You know, this is a very, very symmetrically measured move. If you look at the distance from the weekly, and this is a weekly chart, the weekly 200 MA, this blue moving average, look how much we pierced it during the COVID freakout collapse, and look how much we've pierced it during this market sell-off. So you're at a big, big critical level here in staples, and I do think there's massive, I repeat, massive buying opportunities in the overall XLP landscape. If you look at the RSI on the XLP, if you go through history, there's very, very minimal few times where the RSI, and this is a weekly chart, trading below 27. Okay, let's, for instance, take a look when we traded below this level or at this level. Really, it was the COVID crash, so March of 2020. Then you have to go all the way back down to March of 2009 on the weekly chart to see that that was the GFC event that created the oversold conditions in the staples sector. And then the fourth other time was all the way back in 2002, just coming out of the dot-com crash. Now, one thing I want to stress is that often an oversold RSI does not mark the bottom. It is a great indicator and tool for traders to use just to get a sense of how oversold something is comparatively and historically, but it does not necessarily mean this is the bottom. Do I expect a bounce in the XLP? I certainly do. It should coincide with a market bounce, but you can still break away and make a little bit of a higher high despite the price action making a lower low. So you have to really use the RSI with a grain of salt. But needless to say, for investors who are 5 to 10 years out, this sell-off in the staple sector and some individual stocks will go through. My one favorite, Coca-Cola, KO is the ticker. One of the most oversold daily charts and weekly charts for Coca-Cola. Again, you have to go back through history to really find 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of sell-side pressure in such a staple household name. So you are into massive, massive support here, oversold, piercing all of the long-term moving averages. Let's just look at the monthly chart here to see exactly where we are. So if you look at the purple moving average, which is the 50 monthly moving average, it's very rare that Coke actually slices through that. Here, we've sliced through the 50 monthly, we're approaching the 100 monthly moving average, and that should yield a big, big bounce if this level doesn't hold. But 3 months typically of consecutive downside usually and likely will yield a bounce to the upside. Now, this is one of my favorite ones to the long side. Even if you're an investor, you can just tuck this away back at these levels. And again, this sell-off, it coincided with the release of Ozempic. So again, people think that there's going to be less consumption of these sugars and drinks despite the overall drug causing people to not feel hungry. And one thing from human nature and from studying nutrition and things of nutritional science, one thing you can bank on is when humans have the easy way out, aka taking a magic weight loss pill, often they are successful in the near term, but the long term they revert back to their old habits. Typically, our bodies will overcome this response to this chemical drug, where we'll build up a tolerance, where that may cause people to start overeating again and eating more refined sugars. So I do think that some of these stocks have had a massive reaction to the downside. Even looking at Hershey, HSY, I mean, it's very rare to see Hershey trading in a lower boundary oversold daily RSI for such a long period of time. I mean, you put the low in over here when Hershey traded at 237. Look at that negative divergence in price. Still trading in an oversold daily chart condition, but making lower lows. If you look at the weekly chart, it's very rare to see Hershey this oversold on the weekly chart. In fact, if you draw a trend line from the low at 24.98, you have to keep scrolling back all the way to, again, the 08 GFC crisis, then the 99 period and the 93 period before you start to see those RSI indicators start to flip up to the positive side. But typically these sell-offs, when you see Hershey trading into the weekly 200 MA in a straight parabolic sell-off, that is often a very, very good buying opportunity for both investors and traders alike. Another one that I am liking and I do hold on the long side is Monster. Monster has been a staple stock in the overall market. Clearly you can see this is the big support range where you had major pivot, major pivot, major pivot, major pivot. So those are your resistance points before you broke out, consolidated for many, many weeks, broke out to new all-time highs. This is a failed bullish pattern, so often the sell-offs can be a little bit more extreme to the downside. But again, another extremely getting oversold on the weekly, oversold on the daily. This is another household name, Monster Beverage, that will and should catch a bounce, and likely investors on the long side will start to accumulate this in the coming sessions. One of the big mother of all trend lines that I'm watching on Monster, which it could tag, is basically this upsloping trend line. If Monster were to flush into this key trend line, I would be backing up the truck with both hands as a long investor and a day trader to inevitably catch that technical bounce off of a massive, massive support zone. So clearly a lot of potential setups, long-term investments, short-term bounces that could come into play here in the overall consumer staples market. And it's going to be interesting to see how things shape up moving forward. Please give this video a big like down below. If you're interested in how I'm trading it, visit our website